Good morning, everybody. Sorry for being a little bit late. I don't know where the time went this morning. I was here reading articles and doing all this stuff, and then looked up the clock, and it was, wow, here we are. So anyway, hope it hasn't inconvenienced anybody. We're supposed to return to seasonal temperatures now with scattered showers in our forecast for the next week, which means we'll be in the mid to upper 80s as opposed to the mid to upper 90s. We'll take the moisture. We're still drying out from last week's rains. The wheat crop is made. The spring wheat crop, which is planted in the spring, that's soft wheat. Growing conditions throughout the Midwest really look great. We don't have big areas being flooded out, so corn, bean, spring wheat crops look pretty good at this point. The hard red winter wheat crop will be considerably lower than last year, but we normally only consume about 50% of that in the United States. So wheat's holding in there in the low $7, a hard red winter wheat. So here we are. Yesterday, Yellen spoke. I think we have modest economic growth. They cut their growth for this year from 2.8 to 3% down to 2.2 plus or minus 1. They left 2015's growth at 3%, and then they cut 2016's down to 2.8, 2.5 to 2.8. We have not had explosive growth since this very deep recession, and this is a direct result of industrial tax policy that this government, this administration, touts every damn day. It makes people that have cash want to sit on their cash. It makes people very cautious in expanding their business. Obamacare has made it, has incentivized turning full-time workers with subsidized health care into part-time workers with no health care. It has limited growth plans to, if you were thinking about going from 49 employees to 50, you won't hire that 50th employee because of the burden that comes with it. So everything this administration's done with industrial and tax policy is against growth, and that really makes it very difficult for the Fed. The Fed's tools are somewhat limited to interest rates, and we've had low interest rates forever, and they haven't really helped the economy grow. And they've helped the stock market rocket and go, but little else. So everybody's really happy that we've finally gotten back to employment levels where we had left expanding employment in 2008, late 2007. But that doesn't account for the new people that have entered the labor force since then. And they say 150,000 people enter the labor force every month in our economy. So that's a lot of people that have not been put back to work. So here we are. Both in equities and financials are higher, and the reason being given by most players out there is that interest rates are going to be low for at least into 2015 and perhaps 2016. Now, the Fed did take their projected interest rates up a little bit. They do show that interest rates can start to move higher in 2015, but the Fed's economic projections, if you go back and look at them over time, I mean, they are so optimistic to what actually happens that they have not been able to raise interest rates. Looks like the markets are playing that for the same phenomena. So stocks and equities are higher outside of China. Financials are higher around the globe because interest rates are going to stay quiet today. Okay, we have a couple. I'm going to be out of town. I leave today at noon. I won't be back until Monday afternoon, so I'll be out of pocket. Eric Solheim is going to bring in gold and cover the gold market from the opening through about noon Eastern on Friday and Monday, and hopefully John Bottomley and Bill Thomas will step up to the plate. and support Eric's efforts. We're going to start a new program with Rich Genders today at 11:30 Eastern Time. Rich Genders is going to come in and go over the software systematically and methodically, show you all the features, how to walk through the studies, how to use them, how to get your screen set up the way that you want. And it'll be at 11:30 Eastern for each Thursday. So we have a couple of changes that you'll be facing, but we really welcome Rich's volunteering for the job. Rich is really, really good. He makes films about how to do this and the rest of it, so you'll be in good hands. So where are we today? We got some news. We got jobless claims looking for 313. That would be down from last week's 317. They're looking for the Philly Fed at 13.0. That would be positive. They're looking at LAI at plus 0.6, and natural gas at 112. BCF, the focus will be jobless claims in Philly Fed. LAI no one pays any attention to because the interest rate component in LAI and the interest rates have been low for a long period of time. There'll be another thing coming in LAI. LAI's component utility function because energy costs are going up for everybody, so it'll become even further discounted. Yeah, Rich, Charles, I believe Rich will probably record his presentations, and once he's got them taken care of, they'll be put up on our website. So that's we should have it covered there. So what do we have today? We are at resistance. $20 to 24. I think the market is a P. It can go a little bit higher, but the easiest trade to see today is failure to take out and hold 24. Something has to give. Both these markets, it's really hard for them to trade up simultaneously. Then the second trade will be 27. It will be 31 to 03. So right now, getting started, we'd like to sell 23s to 27s. The selling failure to take out and hold 24, I think, is going to be the theme for today. On the buy side, the last rotate down in P period was 12.5. We're at 18.5, so buying the break here, 12.5. This like to buy the 13 to perhaps as high as 17, but certainly much closer to 13 than 17 if we can get it. So right now, if you're going to play a structure, you'd have a resting limit buy at 15.5, 2 ticks above this low. The second buy will be in the 5 to 9 area. Oh, Charles, you're a man of leisure. You can take off during the day to groom your dog. Oh, my goodness. Probably have a boxer or a short-haired one. That's you just put a blower on them and it's all said and done. Okay, the knob spread's holding in. It's not exploding to the upside or downside, but again, we are in a situation where the bond players say economy softening, equity players say QE, there's not another game in town, buy stocks, and we'll ignore the underlying fundamentals and the economy. The VIX that everybody talks about daily is volatility is way down. It's as low as it was in 2007. When volatility contracts, it gets ready to explode. The issue is timing. Nobody knows when that is. And the reason the VIX is coming is we don't have a two-sided market. We don't have a market that can trade lower. We don't have, I mean, you just buy the damn thing and hold, and every time you make a new high, you add to your length. Because the fundamentals are, the best you could say, are mixed, a lot of players are sidelined. They don't like that. They don't have a great deal of comfort. So that means that the buying gets concentrated in the momentum stocks even more. So you have an even tighter or more limited market, fewer places to play, and that makes it very, very difficult to trade. So we'll make 7 to 11 the sell in the note, 15 to 19. I mean in the bond. On the buy side, 25 to 29, and 17 to 21. Gold is up overnight. Means something's got to give. So the Fed did acknowledge that the return of inflation. They said there would be occasional spikes in inflation, but the Fed has made their 2% inflation goal plus some, especially if you have to eat and power your home through utilities or drive a car somewhere. So we have the attractors still up here at 93. We've said if we can close this baby above the 77, 78 area, this low volume area, the attractor is 93. So we are at resistance. The sell is stops above 85, 87. Market is pointed up. Failure to take out 87 would be a trade. And then coming in just under that high volume number at 93 will be sell 2 on the idea that we can get to 93. If you'd wanted a resting limit sell, it would be at 93.50, right up against that high volume number. On the buy side, 78 to 80, it's very, very aggressive. And then our 75 area, plus or minus. Presentation time today, as Rich said up there, is at 11:30 Eastern Time. It will be recorded, as Rich has said before. So we got all bases covered, and Rich will put the link into the room when they figure out where they want to put it on the website. So we got all the bases covered as best we can, folks. Okay, the euro is much higher. The dollar's gotten clobbered overnight across the board in every country, and that tells you something about the Fed tightening and the rest of it and not printing money. They slam the dollar. I mean, somebody's wrong in their assessment out here. I mean, it's real easy to see, but that won't stop the stock market from going to where it's going to go. I'm sure Mario Draghi is pulling his hair out, or what he has left of it, figuring out how to rhetorically talk the euro down once again. And you can see why European automakers are opening more and more automobile plants in the United States because of the euro. Sell 1 will be 40 to 50. Sell 2 will be 75 plus or minus. On the buy side, we broke this thing out at 36. We're at 22, so we'll make 36, 36.10, buy 1. Then our 75, 85, buy 2. Okay, crude is holding in. There are mixed reports out of Iraq over who has the control of the refinery north of Baghdad. Again, if you had a uniform population. The Sunnis are a little over a third of the population of Iraq. Shia, Kurds are the rest. If they were going against a Saddam Hussein, a hated dictator, Baghdad would fall quickly. The problem is that Malaki is a Shia, and Baghdad is at least 2/3 Shia, and very, very difficult to overthrow by Sunnis. Sunnis can take over Sunni neighborhoods, and the West Bank, the south west side of Baghdad, is primarily Sunni. So the city of Baghdad can be pressured. They can talk about cutting off the water, all sorts of things, but it probably can't be taken. There was one headline this morning that was fairly disconcerting, that the United States wants Malaki to go. You know, here we are. All we had to do was leave about 10,000 troops on the ground over there to show our support for that government, and keep training their armies, give them a little bit of confidence to fight, help if they got in a jam, and we pulled the rug out from that deal to satisfy political needs in the United States. Very, very short-term decision, and now we're going to pay the price. Airstrikes are certainly on the table. The talk now is special forces, CIA, and intelligence on the ground helping the Iraqis to fight. The ISIS army is not formidable. If you wanted to take them down, it'd be fairly easy to do. Remove them from the table as anything else other than ambush, bomb, which is what Baghdad suffers on a regular basis. But I don't know if we have the will or will actually do it. If I were going to count on that to save my skin in Baghdad, I'd be playing with a pretty dicey hope right there. So price of crude oil is probably 107 plus, 105 minus right now. We're right at 106, right in the middle. So we can buy weakness, 105 and a quarter, 105.50, 475, 105. I think this would be the best trade. And then selling against 107 would be the best short. But the first area we got to get to is 106.50. So the first sell is resistance, 106 and a quarter, 106.50. And when we left the market yesterday, we were basically trying to sell the 106.25 to 50 area. So, and that's where we're market stop was at 25. Okay, everybody's favorite market, the E-mini. The E-mini in situations like this is the easiest to call. I mean, all you do is you come in and you buy the damn thing, and you don't worry about it. There are lots of single prints left over from yesterday. They will be initial support. The easiest trade to see in the E-mini today will be failure to take out 1954.75 and change it from resistance into support. The biggest buyer of stocks this year, those protecting their earnings per share, those protecting their executive compensation. They get paid on stock options because of a law passed that any salary over $1 million would be taxed under the Clintons. So all these large corporations, anytime they have an extra dollar, the tighter their compensation, these executives' compensations are tied to the stock price, the more they buy back. So the biggest buyer of stocks this year have been corporations themselves, taking that $2 trillion in cash and supporting the stock prices. And last night, Rolls-Royce bought $1.7 billion of their stock. So that's the name of the game. Okay, resistance is at 50, 51, then 55, 57, and failure to take out 55, 57. So selling failure to take out 51, 55 is the easiest trade to see. If we extend the range and go to new highs, it's been going through these round numbers, so I think a 63, 65 would be the sell too if we blow through 55. But sell one's going to be 55 plus or minus. Obviously, you got to get through 51 to get there. And then on the buy side, we have all these single prints, and that's very strong. So right here, 35, 37 is great support. If the market's going to rally, we're not going to get there. So our first buy is going to be 45, 47, and then 40, 42. This is the best buy I see on the board, and selling failure to take out 55 is the best sell that I see right now. And that's it for the E-mini. The focus will be jobless claims, then Philly Fed. Okay, it'll take at least 15 minutes to get everything up. I'm going to get busy on it. I'll be back in the room as soon as I can get there. Later.